Okay, so we were talking about managing the project. So remember, you're just making sure people do the same things that I taught you in the Greenbelt course, except it's your role now as a black belt to make sure that they're doing it. You know, things in that area don't require tool usage, I hope, and that was where I kind of talked about the toll gates. Unfortunately, people do. But what I want to talk about is one of the most important roles you should try to align with, or one of the most important people in the organization, if your organization has it, is the controller. The controller or finance. You know, if it's a small company, you might be able to get directly with the CFO. Whoops. But the bottom line is, we really, worst case scenario, it's going to be you, but we really want to get with someone who knows the money, who can help us with cost benefit. All right. Now, if you're early in your career, I'll tell you right now, that one of the best things you can do to be successful in corporate America is be known as someone who can quote numbers, specifically financial numbers. So it's one thing, this is why I've put so much emphasis on being measurable. It's one thing to say, oh, third shift wasn't motivated, now they're motivated, versus saying, oh, I reduced absenteeism, which led to an increase in yield, which led to an extra $25,000 a quarter for $100,000 in savings. People that talk like that, others want to be around them, executives want to hear more from them. So the more you can apply those principles and talk in that language, I can just tell you, you're going to do a lot better in corporate America. So, cost benefit from a Lean Six Sigma perspective, we have what are called hard savings and soft, okay? And I think I mentioned this in an earlier video, but hard, it can be removed from the balance sheet or added to the income statement. So hopefully you've had your accounting course. If not, they'll cover that. So let me give you some examples. If it's not one of these two, it's soft. Now we claim that, we talk about it sometimes in Lean Six Sigma, but it's funny money. So let me give an example. Here's a call center. I've got 10 people. We did a project in a call center and we did not need 4. Now this was a complaint call center, so this had to do with customer issues. We did not need 4 people after the Greenbelt project. So what were the savings? Well, first off, don't fire 4 people. If you do, please do not say it was a result of a Lean Six Sigma project, because then people are not going to want to participate going forward. So what we did was, when people quit, we did not backfill them. So 2 people left the company. That is hard savings. You can say we were paying $25,000 a year. Those 2 people left. We have now saved $50K. Okay, and 2 people were transferred to the sales call center, and we booked their sales for 1 year as added income. Okay, and so let's say they sold $50K. Okay, now we already had the salary, this position was open, so you're not adding extra cost, so the savings of that project was $100K. And traditionally, for whatever reason, in Lean Six Sigma, we typically only book the savings for a year. After that, it's just sort of considered part of the business. Now, another example, if you remember the chicken example, the paw retrieval, that Y was only 25% of chicken feet made it to the Asian market. When we were done, it was 75%. All of them were sold. So that's $1.2 million in additional revenue. We did another project in a plant in Alabama on liver retrieval. It was pretty much the same thing. About 25% of livers were able to be used. We got it to 75%. The overwhelming majority of them are still sitting in a freezer. So we captured no project savings because they were not sold. Okay, now the belt still got certified because they showed before and after improvement on a Y metric, but there was no benefit shared with the organization, because you want the financial savings from Lean Six Sigma to be taken seriously. Okay, so that's where, if I can get a hold of these folks, they're really good at helping they're not aware of all the things you're saving. They're going to be the ones to help you determine whether or not it's a real savings. An example with one of the leading auto parts suppliers in the United States, we did a project where it took almost 110 days. So let's say I want to sell this at this auto supplier, and the vendor already has it, like it's ready to go. It took them 110 days in cycle time from when the vendor said, will you sell this, to when it was able to be sold in the store. We got that down to 15. So what we did was, we said, well, I should have made the number easier. We said we've saved 95 days. Well, we're giving you 95 extra days of sales. So what we did was we looked at all new products sold last year, how much money was made on them, and then how much more you could have made in 95 days. So it was something insane, like, you know, let's say $25 million. Now this is where this guy comes in. Well, actually we met with the CFO. So we're like, hey, we need to attribute 25 million in additional sales. And he said, well, I don't feel comfortable with that. And that's his right, that's his job, or her job, but in this case it was a he. You know, I don't feel, because we would have sold them anyway, it just would have taken longer. And so we said, all right, well, how about this? And he agreed. That's 95 extra days of interest on the earnings. And the internal hurdle rate of a lot of companies, that's one of the things you need to ask your, what is the internal, and make sure you ask your accounting professor about it if he's not brought it up. Internal hurdle rate. A lot of companies have this as something that determines whether or not they invest or not invest. But let's say it's 10%. Can we at least capture the 10% interest on that $25 million as savings? And he said yes. So we took, I believe if I'm right, $2.5 million in hard cost savings to the organization. So hopefully accounting will talk more about this, but I just wanted to highlight that, you know, when I tend to talk savings in these videos, it's hard savings. Soft savings is like cost avoidance. We don't need to hire another person. However, you didn't have an open requisition to already hire. You know, if you wanted to hire somebody and it was already published and you were going to offer 85 grand a year and now you don't need that person, you might be able to argue that's hard savings. But if you're simply like the insurance example I gave you, where we went from 10 claims per claim handler to 17 claims per claim handler, that was a throughput increase. It had no impact on cost savings. In fact, there was no real financial savings of that project. That was a project that impacted customer satisfaction. So I do want to stress before I end this video, not all projects are about financial savings. Some are about customer satisfaction. Some are about risk reduction. When you learn the FMEA and Greenbelt, remember I talked about that can be a project. And lastly, you may hear, I don't agree with it, but when you're out there, there are some of this stuff, this legacy stuff from the 90s and early 2000s. Oh, black belt projects need to save $500K. You know, at Penske Logistics, you had to do two projects that saved at least $500,000. I don't accept that. I say you gave the belt a metric, they need to improve it. If you're going to require, this is what I tell executives, if you're going to require a certain amount of financial savings for a belt, then they get to pick the project, because otherwise you're putting an unrealistic constraint on them. So if someone challenges you and says, well, your project didn't save the required, they'll make 250 grand that black belts are supposed to save, you tell them that's an urban legend. Black belts are supposed to improve metrics, and it's up to the executive team to determine what that metric is, which of course is why we discussed strategy so much earlier.